Well, what an earnings call once again for Tesla. I mean, seriously, if you look into the numbers, there are some absolutely amazing things that went on in those numbers, and it was just incredible. And you guys know, I'm not a pumper, so you know I'm not blowing smoke up your rear or anything else like that. They really were great given the challenges and kind of sky high expectations for Tesla. But I have to ask this question: is Wall Street setting up to screw Tesla and, more importantly, us Tesla investors? Well, I'm going to give you the reasons why they may actually try and what they're going to try and why I actually love it. So make sure you like the video and subscribe to this channel if you like the truth without the hype. We have improved slightly, but there's still about 34% of you guys out there that watch me regularly that aren't subscribed and have the bell turned on for notifications. So make sure you kind of check that, or YouTube won't show you my videos because, well, it's YouTube and YouTube is stupid and they don't show you my videos if you don't click subscribe and have the little notifications bell turned on. So Tesla basically had a great earnings call. You guys know that. They beat on EPS and revenue, which I thought would be hard to beat given the delivery numbers and where they were at. And I cannot wait for my main man, Gordon Johnson, to come on and talk about Tesla's demand problems, or their inability to turn a profit despite the fact they are turning a profit, or about how legacy auto is eating Tesla's lunch, or any of the other great things that he likes to throw out there that honestly are never, ever, ever true. It doesn't matter if other automakers actually compete in terms of having some vehicles to buy. Tesla has a margin that none of them can touch, and oh, by the way, I'm sure Gordon will conveniently forget to show how the other automakers reported in comparison to Tesla in terms of growth or profitability or margin or anything else like that. And keep in mind, this was all done during a high inflationary environment in which many of the items needed to produce the cars and just kind of the higher cost overall, some of which will come down, meaning margins may actually go up despite the fact Tesla lowering the prices of their vehicles, which of course, hit margins a little bit this time around. Oh, that's right. And all this happened with the factories not operating at maximum efficiency, and the newer factories and batteries and other innovations just coming online are going to increase those margins even more in the future. So just think about how juicy the entire balance sheet will look when the new factories get fully ramped up and Semi and Cybertruck are at full production too. I mean, it's just crazy, and quite honestly, it's kind of ridiculous at this stage, guys. I don't know why people are arguing against this. Now, I'm not saying it should go to the moon. I'm not saying it should be at $1,000 right now or anything else like that, but arguing that it's a bad company or anything else like that is just silliness at this stage. But regardless of all that great stuff, I still think Wall Street is going to try to set up to take a dump on Tesla and completely screw with us as investors. And there are three main reasons for that. And the last one could be devastating for Tesla stock. But don't worry, I have a solution for that too. So don't worry, we'll get to all that. So reason number one is Wall Street is honestly still not sold on Tesla itself or Elon, or both really, if we're being honest. Now, like it or not, fair or not, it doesn't matter. Not everyone is sold on where Tesla is going, what they are trying to accomplish, and what it will ultimately do for the share price. There's a lot of division on what that number actually will be in the future. You also have many large investors that do not like Elon and his antics and would prefer a more buttoned up approach to running a company. And all we need to do is just look at the latest Twitter drama to see an example of what institutional investors absolutely hate. Now, I'm not going to rehash that again. We don't need to talk about it again, but I had to mention it because it's true whether we like it or not. It's absolutely true. But we all know Tesla would not be where it's at if Elon was not being Elon, but this will continue to be a sore spot for those large institutional investors for the, at least this year, if not the next coming couple of years. Kind of throwing the fact that he makes claims about, basically Tesla being larger than the two largest companies combined, or other bold claims that he's made in the past that haven't really panned out yet. And it gets a lot on Wall Street, basically reacting anywhere from just kind of eye rolls when he says stuff to being kind of completely disgusted when he says things like that. Now, I personally like it. I love it. I enjoy the bravado. And there is a path to actually do that, but it is in years into the future, guys. And those Tesla bulls out there that kind of make it kind of worse, honestly. And they kind of make I'd say the bears for it, but the people that are real negative on it, they kind of make the case for it because they basically say, hey, yeah, they're going to be bigger than both those companies in like the next 2 years. And then, of course, you have the bears on the opposite side who are basically saying it's never, ever going to happen because Tesla's going bankrupt instead. And the reality is both of those narratives are wrong. Both those ultra bull narratives and those bear narratives are both completely wrong. Honestly, to me, the answer is maybe, and the timeline is a decade or so, but the battle between the two is a major turnoff to many investors, and the fact that Elon mentions it despite being a long way from Apple, much less Apple and the number two company combined, really turns a lot of those folks off. The second reason is because a recession or a major slowdown will happen this year, or basically we're already there and it's already happening, and that usually hits the auto industry very hard. Now, whoa, slow down, don't yell at me, guys. For now, many people do view Tesla as just a car company, and we cannot just kind of dismiss that position altogether when the cars make up the vast majority of their revenue. Now, clearly they're better than everyone else and next level on all kinds of things, but when dealing with folks on Wall Street, they look at, kind of basically very macro things, and they kind of want to lump things together like this at a time like this. And if the prevailing wisdom is that car manufacturers get crushed during a recession or slowdown, you bet your bottom dollar they will look to try and punish Tesla, at least in the short term. And finally, we have the actual earnings call itself and the numbers. And honestly, guys, I know that sounds crazy, but just hear me out to the end. Here is the problem with these earnings, which were great given what we have seen this earnings season so far. Despite all the doom and gloom about the earnings recession or the earnings crash, it just isn't happening once again. We heard it was coming last quarter until it didn't happen, and same for the quarter before that and the quarter before that. Now, to be clear, earnings have not been perfect or the best ever or anything else like that, but they were absolutely not a disaster or an apocalypse as described by almost everyone leading into the last quarter for the stock market and leading into this quarter too, which of course means the media and YouTube and everybody else kind of piled onto that narrative and basically said, oh, okay, yeah, you're right, it didn't happen last quarter, but wait until next quarter. Well, it's next quarter and earnings have not been too bad so far, and obviously despite a lot of headwinds, Tesla just crushed it. That's the bottom line. Lots of top and bottom line beats with a lot of different companies, lots of strong guidance or maintaining guidance, and the banks all across the board saying the consumer and the businesses are strong and well positioned. And basically the narrative being they're not really seeing a major recession at all. Basically, they're seeing a mild recession at best. But that is where the problem is for Tesla. Unlike the previous quarters where Tesla did great, but the stock still fell fast, this quarter, despite the numbers being great, the stock ran up almost 40% before the earnings, guys, before we knew what the numbers were, and then another 20% or so after the earnings. And that is a setup where Wall Street just looks to absolutely crush the soul of investors sometimes. And of course, that's right when people start feeling comfortable again about being invested in Tesla or starting to invest in Tesla and basically Tesla being on solid ground again. And if you weren't buying at the low 100s and instead bought the rally, that can be a very unnerving position to be in, especially if you just bought, this week or last week or whatever the case is. So what the heck happens then, and what the heck should you do about it? Well, the truth is, this should excite you as a long-term buy and hold investor. Tesla is executing incredibly well, and you can still buy shares at these ridiculous prices and potentially even lower if Wall Street gets stupid yet again and basically pull the rug out from underneath all of us. This is the exact scenario every single long-term investor wants with every stock they want to own long-term if you have the proper mindset and if you really, really understand long-term buy and hold investing. And that basically would be an extended time of incredible performance by the company, but the stock price stays flat or actually goes down. Then you have even more time to add shares that you shouldn't be able to add at those prices. You just shouldn't. But it happens all the time, and the longer it goes, the bigger kind of the slingshot is when it finally runs again. And it will eventually run, guys. And then you actually have more shares than you would have had if it had run up a lot earlier. And oh, by the way, you get a lot more shares at a lot cheaper prices too, meaning it builds you more wealth in the future when that run eventually happens. And of course, you guys know exactly what's going to happen, right? People will FOMO into the stock again because it came out of nowhere, just like Tesla did in 2020, right? The reality is Tesla didn't come out of nowhere, and those that bought in 2017, 2018, or even earlier saw signs all over the place that it was going to be a beast at some point in time. And that's kind of a scenario we're getting right now again, right? That's the spot. You're always like, oh, that guy that bought in 2017, he's so lucky to have bought back then. Or I wish I was that smart, or I wish I was a genius, or whatever the case is, whatever the heck is out there. That's what happens during those times whenever it's just beaten down, disproportionately for a long period of time. Those are those type times that as a long-term buy and hold investor are incredible times to buy great stocks at incredible prices and increase your long-term wealth over the long run. And they got the benefit of that rubber band kind of being pulled so tight that not only did Tesla run, but it ran up big. And if you were basically adding during that whole time that it was down, they also had far more shares than they normally would have had, allowing them to build far more wealth than the stock had not traded flat for 6 years. It would not have happened if it would not have traded flat for 6 years. And that's honestly why I don't trade it all in the first place. I just buy and hold and take advantage of every time Wall Street gets stupid and send Tesla back down to my price target, because I know that is how real long-term wealth is built. And remember to check out the link down in the pinned comment If you want to actually take 5 courses on how to do exactly what we talked about today, have a kind of a support network there of a whole bunch of folks. I promise, guys, it's not just you can access me all day long. I answer all my DMs. We do live Q&As. We do all kinds of crazy things like that, where if you want to talk to me, you talk to me all day long. However, we have a ton of group members that jump in there and help you with these things like mindset, year planning, what to do, all those sort of things like that, helping you analyze the stock, the whole nine. So make sure you check that out if you're interested in that. And, click this video here if you want to see the 10 most important stocks in the stock market for 2023. And click here if you want to see my exact plan for what I'm doing in this market. So thanks for watching, and we'll see you in the next one.